Welcome to the weekly stock market roundup as of Friday, 7th November 2025. This information is purely historical and reflects our understanding of past market events. It is not investment advice, stock recommendations, or financial guidance of any kind. Please conduct your own research and consult a SEBI registered financial advisor or other qualified and certified professional before making any investment. Now, for the BSE Sensex, it closed at 83,216.28 as of Friday, 7th November 2025. It was down 0.86%, as you can see. It was up 4.69% year on year. On a 10-year basis, it is up still now, as you can see. It is coming up here. This is the downswing that you can see for the last few days. On the NSE, the story is similar, 25,492.30 as of 7th November 2025, down 0.89%. 25,722.10 was what it was last Friday, 31st October 2025. On a year-on-year basis, it is up 5.57%. And on a 10-year basis, as you can see, similar to the BSE, it is also on an upswing, even though it's a bit of a downer here. Now, on the global indices category, if you look at it, the Nasdaq is still outperforming everyone. The Indian indices are here. The Dow has kind of risen up compared to last week. Last week, the Nikkei was up. Dow was a bit down, but Dow has kind of pulled up slightly, and Nikkei is here. European indices are here, and Chinese indices are here. You can see that right here, the performance of the last 10 years. Nasdaq is 438.28 performance. Nifty 50 and Sensex are 222.07 and 218.5 respectively. Then, of course, there is the Dow Jones and the Nikkei 225. The Nikkei has been pulling along quite nicely for the last few years now. Then Euronext 78.19, FTSE at 53.81, and then at the very end are the Hang Seng, the Hong Kong Stock Exchange at 15.47, and the Shanghai Stock Exchange Composite at 9.62%. On a year-on-year basis, you can see that this is how it has been. The Indian indices have not been performing very well, and this is the global indices out here. The Hang Seng has kind of gone down from what it was about to go into in the around, say, August, September of this year. Then again, Nikkei also has kind of pulled down slightly. You can read more about them in the blog that we have written, and the link for that is in the description. Also in the comments, if you go down, you'll see that. Now, looking at the numbers, if you see, overall, the Nasdaq is 18.73 comparative to the Nikkei 225, which, as I said, hasn't outperforming everybody. The Hang Seng has performed very well the last 1 year, 28.47. The FTSE also has performed better than Nasdaq. This also is the reason is that there's been a pullback in the Nasdaq as of this week. All the tech stocks are down. You can again read about that in the blog article. The description and the comments will contain the link to that. The Euronext is 15.34 and Indian indices are here. And now this is how it has been. The last month-on-month returns are not very good for quite a few of them. 0.31% down, the Nasdaq 100. Hang Seng 2.19% down. Euronext 0.75% down. And the others are also not performing very well. If you can see, the Dow Jones is just slightly here. And also the FTSE is slightly just up. Nothing to write home about. Now, if on the sector performance basis, the BSE Telecommunications, BSE Financial Services, BankX, Oil and Gas, and Realty were the top 5. Bottom 5 were BSE Utilities, BSE Power, Industrials, Commodities and Metal. On the NSE, Mid-Small Financial Services, PSU Bank, Financial Services X Bank, Financial Services 2550, Oil and Gas, and the downward Media, Consumer Durables, Metal, IT and FMCG. Now, on the top stocks week on week, 3M India, CCL Products, Hitachi, Redington, L&T Finance, City Union Bank, Indus Towers, Vodafone, Sriram Finance, and Newland Laboratories were at the top 10 performers. This is the weekly close. This is the previous week close. And you can see the performance out here for the week-on-week performance, the week-on-week percentage up or down. The bottom 10 with Ensar, Supreme, Godrej Agrovet, Amber Enterprises, Blue Star, Apple 3i, eClerk Services, JK Cement, DEML, and Devyani International. Again, the week close, previous week close, percentage difference, and the week-on-week performance. A story similar for the NSE. Also, 3M India is again here. CCL Products is again here. Hitachi Energy is also again here. Redington, City Union Bank again here. L&T Finance, Vodafone Idea again here. Indus Towers, Sriram Finance, TBO Tech. It was down last week, if you remember, but if you can check that out in the other video that we have got for the week before. Of the bottom 10 stock, Reliance Infrastructure, Reliance Power, Network Technologies, Gensar Technologies, Godrej Agrovet, Transformers Rectifiers India, eClerk Services, Harigama India, Blue Jet Healthcare, and JK Cement. Some of the companies you can see are similar to the NSE. Let us now look at the story that has been kind of in the limelight right now about how there's a DII, domestic institutional investors have a surge in stock market holdings. They are now at a record 18.26%. This funded by record-breaking retail participation through SIPs, the mutual funds, systematic investment plans. Total mutual fund ownership of Indian companies is an all-time high right now at 10.9%. This is a powerful bet. Experts are saying that the long-term growth story of India is superior to the global alternatives, even at premium valuations. Now, DII holdings are more stable than retail investors, and this may imply a reduced volatility in the future. If you remember one of the previous videos that we have done on one of the few weeks earlier, we had mentioned that 10 years back, the Shanghai Composite Index, it had got a major downturn because there was a big sell-off by the retail traders. So the market had collapsed at that time. And overall, the Chinese performance have not been very good the last 10 years because the government clamped down also on different stocks and different companies, for example, Alibaba, Tencent, and so on. But nonetheless, that volatility that had happened in those years, 2015, has kind of been the starter story of how the Chinese indices have performed over the last 10 years, as you can see. Now, with the Indian DI holdings doing better, we believe that there'll be more stability than what you would see if there are more retail investors in the stock market. Now, the story about FIIs are really selling. FIIs are net sellers in the secondary market, the trading existing stocks. In the IPO market, they are net buyers. In October 2025, they invested $1.2 billion, rupees 10,708 crore in domestic IPOs. So overall, the Indian story is still strong, even though the market has been down this week. We believe it will rise in the future, as experts say. And that is it for this week. Thank you for watching. I'll see you again next week. Goodbye and a very good week.